Hello and welcome to Big Deal. I'm Nisha Podar. Now, Ghar Wapsi theme is gaining momentum in the startup space in the midst of several headwinds faced by the new age digital companies. Now, Ghar Wapsi is essentially domiciling back to India those startups which are founded by the Indians operating in Indian market presently but incorporated overseas. So the economic survey this year had also paid cognizance to the onshore Indian innovation aspect with the concerted effort by the Indian government as well as the regulatory agencies. But this is not an easy structure, nor is it tax efficient. And the startups seek government support along with tax dispensations. So let's delve deep into this with the industry players. Joining me today on Big Deal are Siddarth Pai of 314 Capital, Mehul Bheda of Dhruva Advisors, as well as Dhiresh Bansal from Meesho. Gentlemen, so good to have you on CNBC-TV18. Dhiresh, beginning with you. Your company is amongst the many aspirants looking for a reverse flipping. So why does it really make sense now, and why this big change in strategy after several of the companies like Meesho just flipped overseas a few years back?
Sure. Thanks, Nisha, and thanks for asking that question. I think if you dial back about a decade or so ago and kind of look at the market that used to be present in India, both from a venture funding perspective as well as broader capital markets. At that point in time, Indian markets were probably not as deep as they are today. And that, I think, over the course of the last decade has continuously progressed. Now our domestic markets, both on the venture funding side as well as on the capital market side, are much deeper. We get close to about 15,000 crores in SIPs every month. And I think overall, the pool of liquidity on the domestic investor side, both institutional as well as retail, has increased manifold. As someone like us or others as well, there are about 20 plus of the 100 odd unicorns that are currently in India, which are incorporated outside. It is sort of a question that we think about, which is, does continuing to be incorporated in jurisdictions outside India kind of make more sense, or is there time to kind of come back? We feel now with the depth of the markets in India, what the capital markets can offer, the level of understanding of the domestic institutional investors, it is quite important to think about this as a very real option, as well as I think the brand awareness that a lot of the startups have now in India versus some of the overseas markets also makes it very important to tap into this kind of liquidity pool and also have the opportunity for the investors to participate in the value creation going forward.
Right. So, Dhiresh, I would only say that, it's a chicken and egg story when it comes to the Indian market, depth as well as acceptance of the digital companies. Some of the digital companies took that leap of faith in Indian market and they saw that Indian markets evolved with that trend as well. But I do understand that VC community for the longest time was waiting for an IPO opening for exits, which it was not getting earlier a decade back. Siddarth Pai, jump in on this. You've been engaging with the government on this particular aspect. You've written a white paper. What are the findings? What is the requirement? And does government view this as a homecoming or Ghar Wapsi, as we are really saying, or return of the prodigal son?
Nisha, that's actually a fantastic question. The Honorable Prime Minister has actually, I would say, evangelized the term startup and actually made it a household term as of now. In fact, the industry has actually dubbed him the startup prime minister, and startups have a very, very close place in his heart as of now. Now, unfortunately, a large amount of the reasons why startups have actually decided to flip overseas, which I've also covered in an article and several papers, have actually authored in that regard, actually relate to three broad reasons. One is with regard to operations, second is regard with the availability of capital, and the third one actually becomes tax reasons itself. Now, ever since 2014 onwards, the government has actually spent a substantial amount of time to actually rectify a large number of these issues that actually end up existing. And this has actually created a far more conducive environment for startups to end up coming back. As of now, there are still 3 or 4 large areas that the government needs to work on, and the entire industry bodies such as IBCA, iSpirit, the Association of CFOs of AIFs, etc. Everyone's gotten together to actually speak to the government on this matter. The government's actually looking very intently on this particular issue. I think the reasons why startups decide to move overseas have actually reduced as the scope of time. And a number of startups who moved overseas actually realized there's no point being a very, very small fish in an extremely large pond, for that matter. Their market actually exists in India. The Indian media gives them a lot of credence when, in case they actually put their results. The Indian capital markets have also shown a large amount of acceptance for high burn companies, and they've actually given them premiums in their valuations also. So I think the reasons for these companies to end up flipping back to India actually remains very, very strong. And the government does create a scheme to allow them to come back. I think a large number of them will decide to actually come back to India and re-domicile to India itself.
Right. So that, to your point, I must also say just a few years back, it was not even when India was not getting VC funding, but just a few years back when government had proposed global direct listing, but it was in the back burner. At that time, also, a lot of companies desperate to go public in the overseas market had flipped overseas. And some of them may look at a change of strategy, and a bold one at that, in a matter of few years. But we'll delve deeper into what are the technical aspects of doing this, because it's a very big strategic change and also a big structural change, which is not tax efficient. Mehul, how would you summarize this? Are you spending a lot of time with the startups working on this structure, or is it on a standstill right now waiting for government's dispensations?
I think, there are a few structures which are possible. So no two structures are alike. So, one has to look at the facts of each structure and then see how to make it more efficient. See, one part is the process, right? How do you get the startups domiciled back to India? Because it's a huge change. And the other part is going forward, how does it work? So one part on the process, I think there could be a cross-border merger that you can do. You can do a, incorporate a new entity as a subsidiary of an Indian company and move the overseas business there. You can do a transfer of shares which was done in PhonePe. I think each of it has its own nuances, and one has to look for each of these problems and figure out a solution. Of course, if the government does something, it's always welcome because you will always find that there are some pros and cons of each structure that you go through.
Right. We'll discuss a little on the tax aspect with you, Mehul. But I want to ask Dhiresh. Dhiresh, is, Indian market, and most of the economists have also said, and market experts have said, that India will be better than, would still grow and will not fall as much as some of the Western markets would. Is that the big attraction for the startups to come back to India and try and list over here, because that particular pocket has already been created, and we have seen that the global investors don't shy away from investing in a digital company in India on the Indian bourses? Is the IPO and the exit mechanism still the biggest pull for this big strategy?
Sure, Nisha. I think there are a few different reasons, right? One, definitely there is, more liquidity available for new age companies now in the Indian markets, like I had mentioned earlier. But also, I think the whole fact around brand awareness, because let's say right now the market is such that Western markets might be somewhat kind of more negative than the Indian markets, but those situations kind of ebb and flow. So I think it is also about what is the natural destination for a company which has most of its operations in India, most of its assets, employees, everything in India, and the broader resonance of their kind of business is higher in the Indian markets. And that's, it is that which kind of makes someone like us or others as well to kind of think about India as a potential listing venue eventually.
Right. So that could be a very big pull. But Siddarth, does it work wherever your brand presence is, recognition is, and where the market is? Listing over there, is that the thought process, and is that what investors like yourself are also recommending?
100%, Nisha. I think it's very, very important for a company to actually be very close to its customers and to actually build a brand equity much closer to where the customers are, as opposed to choosing a domicile that's actually far divorced from their entire market, their customer base, their team, and everything that's there as of now. I think for public limited companies, and this is something that a number of startups who've listed have actually learned, the bourses don't actually become the destination, they become the beginning of an entire journey. And the amount of marketing effort you put in as a public company is actually far more than what you put in as a private company. And the media plays a large role in that. Even some of the Indian startups who decide to actually list on either NASDAQ or the NYSE, when they release their quarterly results and everything for that matter, they get a lot more coverage in Indian media as opposed to getting any sort of coverage in foreign media. Just to put into perspective, the quarterly profits of Google or Alphabet is actually $50 billion a quarter. And some of the market caps of Indian startups have actually listed over there is actually a fraction of that. In the US, a simple rule of thumb is unless you have about a $50 billion market cap, most of the media won't actually give you any sort of credence or anything for that matter. So hence, I actually said you become a small fish in a very, very large pond. Whereas the entire market is here, there's a lot of comfort that's actually given to consumers who not only want to become consumers of these particular products, but also want to become shareholders as well. We've actually seen several of the D2C companies who listed in India. The greatest pull that they actually had from the entire retail population was because they were actually users of those products, and hence they want to become shareholders as well. That is a very important calculus that actually goes in, and a number of investors are aware of that, and they're actually encouraging their companies to start looking at this in terms of their exit plans and their IPO plans as well, to make sure they can capitalize upon that.
So what I gauge is a mix of the aspirational young entrepreneurs who want to make a name and not getting overshadowed in the US market. But I would say that the investors and the market had a lot to do because they thought that the valuations overseas was much higher, and now the Indian market is looking equally good if the valuations are put right, though the domestic institutional investors are quite critical about the valuation dynamics of the digital space. But we'll discuss more because on this subject, because Gift City, can that really see the tax-free transfer of some of the fintech companies in the startup space? Is that a possibility? A committee has been formed. We'll discuss that and more after a very short break. Stay tuned to Big Deal.